This show is produced by the Hartman Media Company. For more information and links to all our great podcasts, visit hartmanmedia.com.
We got our last couple in the quad rented, and we got the last one of a duplex rented. And so we have full occupancy, and it sure feels good to get the full check every single month. It's just a great feeling. And so hopefully in December, we're going to take over 2 more. And actually before then, take over some from Alabama, actually all, and then Memphis as well.
Welcome to the Creating Wealth Show with Jason Hartman. You're about to learn a new slant on investing, some exciting techniques, and fresh new approaches to the world's most historically proven asset class that will enable you to create more wealth and freedom than you ever thought possible. Jason is a genuine self-made multimillionaire who's actually been there and done it. He's a successful investor, lender, developer, and entrepreneur who's owned properties in 11 states, had hundreds of tenants, and been involved in thousands of real estate transactions. This program will help you follow in Jason's footsteps on the road to your financial independence day. You really can do it. And now, here's your host, Jason Hartman, with the complete solution for real estate investors.
Buenos dias, empowered investors. Greetings from Mexico City. Just arrived here this morning, and I am waiting for the hotel room. So I'm on this beautiful rooftop garden, getting some work done, talking to you. Just finished up several days in Austin, Texas, where yesterday I had lunch with Lance Armstrong. That was a fascinating lunch. And imagine this, Lance Armstrong rode his bike to have lunch with us. Of course he rode his bike. The odd thing about it, though, is that he rode an e-bike. The best cyclist in the world rides an e-bike. Lance, come on, man. I just thought that was kind of ironic that he rode an e-bike. But anyway, yeah, it was great lunch with Lance Armstrong. Learned a lot about him, his venture fund that he's working on. And, I did not know this, but his fund backed Oura Ring, the biohacking ring. I just got one of these. It's not an Oura Ring. Mine is a different brand because, hey, I read some reviews and watched some YouTube videos, and they said this was the best one. Although my ex-girlfriend has the Oura Ring and she loves it, so I don't know. We'll see. Anyway, great lunch with him. Met with some other people, had dinner with Tucker Max and his wife last night. Just had some great conversations, did some great stuff. Attended John Maxwell's mastermind on Monday. That was excellent. Really just a great few days in Austin, Texas. But now I'm in Mexico City. Going to be doing some good stuff here, and I'll report back to you on Mexico City next week after it unfolds. So today we've got David Collum back with us again today to talk about the rapid and amazing changes going on with our new administration. Now, love him or hate him, but Donald Trump is the Energizer Bunny. That man, for his age or for any age, has so much energy. He's really an amazing person. Love him or hate him. I'm not saying good or bad. You be the judge. But wow, he is getting so much done. I mean, think about if Kamala had won, right? What would she have been doing the last several days? It's only been 1 week since we got the election results, right? It's been a week. And Trump has gotten so much done already. He's assembled this dream team cabinet. He has officially launched the Department of Government Efficiency, DOGE, like the Dogecoin, right? Of course, Elon and Vivek, who's been on the show. Vivek has been on the show. Go back and listen to that interview. He was talking about his book, Woke Inc., phenomenal book by Vivek, which you really should read or listen to. It is so good because it really helped me understand why these companies do these seemingly self-sabotaging things and embrace these crazy, just very counterintuitive ideologies. But they do that to hide the evils that they're doing many times. That's not the only reason they do it, but that's one of them. So go back and listen to my interview with Vivek. You can just go to jasonhartman.com always. And for any of the thousands of podcast episodes we've done, you can just type in keywords on the search engine there, or better yet, you can use it's now our fourth version of AI chatbot, or you can go to that directly at jasonhartman.com/AI. And I dare you to try and stump the AI chatbot. It is really, really smart. In fact, many of the explanations that, as I've tested it and fiddled with it and tried to stump it myself, honestly, I hate to admit this, but they are better than the explanation I would give you. Yes, it is drawing from my content, my original work, right? But the AI chatbot just assimilates it so well. It is truly amazing. Check that out, jasonhartman.com/AI, or just go to the site, use the search engine or the AI chatbot at the site directly. And either way, you'll like it. But look at this. And this is from Charlie Kirk. Within 3 days after the historic landslide victory, the EU wants to buy American natural gas and avoid tariffs, right? Putin says he'll sell Russian oil in US dollars rather than BRICS currency, right? Remember, they've been talking about the threat of the BRICS and how the BRICS control, at the time I was in Brazil, because Brazil is obviously the first BRIC, right? The B. When I was in Brazil, I talked about this, how they control 29% of global GDP. Many people are scared of this. Many people fear that American hegemony is going away. I say that's not true. I say it's not even close to true, especially now, especially after the election. Wow, it's an amazing time to be alive. And look, even if you hate Trump, you are going to win too, okay? You are going to prosper. Your taxes are going down. Things are getting so much better for you. Do you know what he's doing? He's working against the 2 credit card monopolies, MasterCard and Visa, because they have just been raping the population with their massive interest charges for decades now and making the poor get poorer. This is going to be one of the most phenomenal administrations in American history. I really have a lot of faith. It's going to be an amazing 2 years until we get to the midterms. It might be an amazing 4 years. It might be, depending on who comes next, it might be 8 years. It might be 16 years. 12 years comes before 16. Got to do your math in order here, Jason. So anyway, look forward to a lot of great stuff. Now, it's not without its cross currents because, these tariffs are going to put upward pressure on housing prices for sure. And the labor supply diminishing because a lot of these illegals are doing construction work, right? That labor is going to get a lot more expensive. Remember the shows I did with the various building industry associations, not just one of them, but with several of them. We talked about how the average construction worker is now, give or take, 50 years old. Okay. So if you take out the immigrant labor and you just use the American labor, right? After these, did you see the new borders are? Wow. Oh my God, that guy means business. Okay. Anyway, look for the clips, look them up, look up the video clips, and it's shocking. That's going to drive up the cost of construction massively. There will be slight lessening in demand though. See, these things are complicated, right? Because if they really do these mass deportations like they're talking about, that is going to diminish demand a little bit. But again, that's much less of a factor than the upward pressure on labor costs, tariffs, and building materials. Think of all of the little parts and the materials that make up a house and how expensive those materials will be after they have tariffs slapped on them. So things are really changing, folks, in a major way. But as these tax breaks become reality, no tax on tips, no tax on overtime, remember, the Republicans control the entire federal government now. So things are just going to breeze right through. It's going to be a cinch to get this stuff through, right? This is going to happen. These changes are going to happen quickly, and they are going to be amazing for Americans, right? They're just going to benefit massively from this. Business is going to flourish. Deregulation, just good stuff, folks. Good stuff. And, one of the things I've said for a long time is that I am very optimistic about the future when it comes to technology, economics. Look, I'm not Pollyanna. I know what's going on, folks. I know the economy is built on a house of cards, but so is every other economy. Okay, get over it. It's all relative compared to what is life's most important question, right? So the doomsayers will say, oh, Jason, you're just too optimistic, yada, yada. But I've always been very pessimistic about the culture war. I think our culture has decayed at such a fast, rapid rate in the last 20 or 30 years. It is just really quite depressing. It really is. So it's an amazing time to be alive when it comes to the future, technology, the progress we are going to see in the next just 5 years, 10 years. It's going to amaze you. It's going to amaze everybody. But the culture war has been terrible. But a new administration does set the tone for at least part of the culture. Now, of course, idiots will never get it. They're just fucking idiots, okay? There's some people that just will never get it. But largely, the administration sets the tone for the culture. And love him or hate him, but Trump, in a lot of ways, he's matured since the first presidency, since his rude statements, since his immature fight picking. And I was critical of all of that. Okay, you heard me on prior episodes. I've been very critical of him on a lot of those things, but he's matured. He's going to be better this time around. And these wars are going to end. And there are just so many things that are already in 6 or 7 days going so incredibly well. It's amazing. So back to Charlie Kirk's statement, right? This was on Twitter or X, the one place that you can speak freely, but soon to be more places you can speak freely because Trump administration is going to attack these evil tech companies. And hopefully he will listen to my advice, which I've always said, there's a few things we got to do with these tech companies. I've been saying this for 15 years, people. This is not new. It's not after J6. It's not after the last presidential election scams, right? It's not after any of that. It's way before. My statements predate all of that stuff by a long, long way, by many, many years. You've got to regulate these companies under common carrier laws. So people have the right to say what they want. These companies are no longer private companies when their GDP by revenue equivalent to the GDP of a country, puts them in like number 70 on the planet. Okay, these are the public squares. They control way too much information. I'm specifically speaking of evil Facebook and evil Google. Okay, and Amazon is evil in a lot of ways too. They do censorship through what they allow to be published on their platform. Censorship is the biggest problem facing the human race. If we can't communicate freely, all bets are off for everything. There is just no bigger threat. So these companies, they have got to be regulated under common carrier laws or their algorithms have got to be made public so people know why they see the things they see in their news feed, in their search results or search engine results pages, as they call them. When the AI gives them back answers to questions, people need to know why they got that answer, why they're seeing what they're seeing in their news feed as opposed to something else. Remember, you can't hear the dogs that don't bark, and you can't think about something that hasn't been presented to you. Something that you don't see, you cannot consider, right? Very few people consider things that they don't see or don't hear. So it's very, very important that people know why they get certain search results. And then antitrust. They've just got to be regulated. I mean, the antitrust laws need to be enforced. It's not that they're not violating them already. We all know they are. They know they are. These evil, disgusting companies know they're violating the law already. And that's why, as Trump was gaining so much momentum, Mark Zuckerberg, did you see him change his tone? It's like, he gets it, like suddenly he gets it, right? I doubt that was out of goodwill. It was out of necessity. But hopefully the balance of power will even out a little bit. I think it will. So a lot of good things going on. What else here? Hamas is calling for peace. Zelensky held a private phone call with Trump and Elon Musk. Okay. Mexico broke up a large migrant caravan heading to the U.S. I mean, folks, it's all just getting better so fast. It's an amazing time to be alive. And hopefully this will trickle down to the culture war too. Because even if we didn't have this election go this way, we would still see a lot of prosperity and a lot of progress just because of technology. Remember, I've told you for many years about this big war going on. Look at it like a boxing match, like boxers in a ring, right? And the announcer stands in the middle and says, in this corner, you have the inflationary effects of bad monetary policy and bad fiscal policy. And in this corner, you have the deflationary effects of technology and progress. And they ring the bell, and those two start to spar. They start to fight, right? Who will win? I don't know. None of us know. We don't know who will win. But I say that technology will probably lose that battle in terms of an inflationary versus deflationary force. Why? Because there is no limit to how poorly the government can spend money and how much money they can create out of thin air and how much QE they can do when they need to do that the next time around, quantitative easing, or whatever they do to loosen the money supply. They pull many levers, right? But most people just categorize it, they sort of group it together as money printing, money creation, right? So let's just call it that. And they can do that a lot faster than technology can progress. And technology is progressing at an amazing pace. Why is it different? Why does that look like the proverbial hockey stick on the chart, right? Where things are moving along, they're going upward, and suddenly they go way up and things get way better, right? Well, because now with artificial intelligence, the technology is beginning to teach itself. And folks, that's a whole new world, baby. We have not really ever been here before. That is a whole new world. And it can think so amazingly fast that it can teach itself and program new things and think of new things without humans thinking of the thing, right? And it is scary. And hopefully Trump will put Elon in charge of AI advisory for guardrails, right? So we don't become the next Terminator movie, right? So yeah, but just a lot of great stuff going on. It's really an amazing time. And if you subscribe to our newsletter, hopefully you read the article we put out yesterday that was about the Trump tariffs and the upward pressure they are going to put on housing prices. And hopefully you're heeding the warning, folks. The advice is buy, buy, buy. Build your portfolio faster. There's a lot of pressure brewing to see prices go up even more. And there's not a lot of easing coming yet. Now, we are going to see some signs of easing. You know, if Trump opens up some of these federal lands, sells them to real estate developers. I mean, look, there's a lot of land that developers can already buy. There's not particularly a big land shortage. What there is a problem with the construction materials, the ingredients to the houses. Those are really the more important component than the land. But you know, you ease the land supply a little bit, you know, that'll be a little bit of an easing pressure on the other inflationary pressures on home prices. But there's a lot of pressure. And Trump, you've already seen his squabble with Chairman Powell at the Fed. The reporter asked, you know, if Trump asked you to step down, would you do it? Powell says, no, period. End of discussion, no. But you know what? You don't have to figure out how to fire the Fed chair if you just end the Fed. Then there is no Fed. So Jerome Powell's out of a job either way. So I don't know, you know, this is a little bit far out. I don't know if this will happen. This stuff's more radical. It might happen, but certainly the pressure from the Trump administration, whatever they can do, they are going to do it to ease the money supply and see lower rates. And as that happens, you know what happens to home prices. They do nothing but go up. In these historic rate increases we had a couple of years ago, we still see home prices going up. Every crash bro has been totally wrong, and I have been totally right. I know you don't want to hear Jason say, I told you so again, but I told you so. All right, let's get to our show. Let's get to David Collum and enjoy this. I hope we're going to see you today on our monthly masterclass. We're going to be talking about lease options and tenant buyers day. Don't miss those. If you're an Empowered Investor Pro member, you get all of the replays in the Empowered Investor Pro archive. We've got just a huge library of great content there. Empowered Investor Pro is probably the cheapest, best investment you can make outside of actually buying more properties because it's the cost of a gym membership or less, just the benefits with our monthly Zoom meetings, the access to the past meetings, the past master classes, the community network, just the value people get out of this, you know, 1,000 times what they're paying for it. So consider joining Empowered Investor Pro if you are not a member already, but I will leave it at that. Okay, let's get to David Collum. Here we go. 15 years ago, I was saying this on my show. The great thing about a podcast is you can just go back and listen to the old episodes and see that I'm right, okay? Because the number of non-primary beds in the world, David, massively expanded. I mean, even at the rise of the...
I think you're making my case, though.
No, I am making your case to some extent, but it's not a black and white thing, okay? That's what I'm saying.
I know. I know that. Now, my question I like to ask, because I didn't have an answer to it for quite a while, is when in 0809, when the most crazy real estate market since the Florida 1920s market, which I bet you, have you read Bubble Under the Sun?
No, I have not.
Oh,
but
you should
I
read it.
have
You'd
studied
love
that Florida.
No, but you'd love the book. It's an entertaining book, and especially if you know Florida. Especially if you know Florida, because it's sort of the history of all the towns in Florida.
I'm looking it up right now, but I have studied the early Florida crazy real estate market and swampland.
This is an easy read. This is an easy read. And the funny thing is that the bubble, it depends. Ironically, I said something and Chanos jumped on me and said, well, that was not quite it. But on Twitter, and I'm going, well, I've been one up by that guy. The claim is that the market burst when a ship capsized in Miami's harbor, and it took 38 days to get out. And they said that in theory was not a problem, except by the time they got the ship and cleared the harbor, the bull was over. It was over. And then Baltimore, the ship hits the bridge. And I go, oh, wouldn't it be weird if that was some pricked bubble? But it was entertaining. It was such an entertaining concept. So the question I ask is, in 0809, who grabbed up all the inventory? I didn't know where it all went. I said, they created a ton of houses. Where'd the inventory go?
Well, the institutional investors got into the game shortly after that. They only control about 2% of the market. They do hold most of that. Now, they have, in terms of aggregate numbers, their numbers have only grown, but they, of course, rejigger their portfolio like anybody does. They sell things, they buy things. That's a normal behavior.
They got bribed to buy it, though. Right now, the fixed income market is not bribing them to hold it.
In other words, your point is you think institutional investors are going to do a sell-off.
I think so. I think they've started, haven't they? Aren't these guys? I know they're liquidating commercial real estate.
Not in aggregate. And we're talking single family homes, not the commercial properties. Obviously, office market is terrible.
Single family homes, yeah.
Single family. In aggregate, they are still growing their inventory overall. They're still building build-to-rent communities. I just had a big institutional investor on maybe 2-3 weeks ago. He had some great data, charts, graphs. They're buying. They're all pretty much increasing their numbers. Okay?
That's not momentum. If you get out over your skis, it takes you a while to get back away from over your skis. So if you have $100 million invested in a project, you don't just shut it down as soon as things turn south.
Of course not. You've got to keep.
You got to crush your fingers. You got to crush your fingers. You got to go. If I can just weather the Fed dropping the rates, and then if the Fed drops the rates go up, not down, and the margins go up, not down. Then you say, okay, now I have to sell. That's my worldview.
Okay. I don't think that's happening, but we can agree to disagree on that.
Well, I tell you, anyone listening who believes me, not you, is nuts.
Well, thank you. But okay, let's just talk about the Fed for a moment, though. These last 2 rate cuts, we just had one this week, and then last month, they were sort of weird, right? Because the mortgage rates both times went up, which is unusual.
That's my point.
I know. But overall, I think the trend is toward the pivot, and they're going to cut a little more. Now, with Trump getting in, I think they're kind of taking a wait and see next month maybe, and maybe the month after that. But overall, I think the trend is rates to ease a bit. Yes, no? What do you think?
Maybe. I'm not sure the dial works is as correlated with I think it's possible that we've had a 40-year period where the Fed got to at least, it's like a shopping cart with a steering wheel for the kid. And the kid thinks he's driving the cart. And I think we could discover that the Fed's twirling the knobs is not going to work. We've gone from interest rates of 16 higher percent to 0.
Yeah.
That game is over. And the question is, are we doing a James Grant huge credit cycle rollover and entering the other half of a credit cycle that could last another 40 years?
I think we just don't know.
That's right. But it should scare people to death if they are out over their skis on this stuff. Now, again, you say that the rental units are oversupplied. That will pull on the housing.
Wait. Apartment rental units are oversupplied.
That's right. But that will be
that
will suck up consumers when they're doing the cost benefit analysis. Say, look, I can rent for this.
Yeah.
I have to pay this to buy. I'm going to rent.
This is the beautiful thing about income property, David. You're either in a market where rents are being pushed up because people refuse or can't move out of the renter pool. So you can adjust your strategy because it's a multidimensional asset. You can be in a capital appreciation market when money is loose and housing supply is short and demand is high, or you can be in a cash flow market when rents are being pushed up because money is tight and people can't move out of the renter pool, as long as you must have one factor, though. The population must be growing, at least in your market, right? Because if you don't have that, or at least a stable population, then you got a problem.
Well, that gets to the must question. Do we have a demographic reversal going on?
Yeah, well, we overall do, but America keeps papering that over with immigration. And so, we've got a different attitude toward that. Now, he did say let's get some immigrants from non-shithole countries. And of course, everybody, just pilloried him over that statement.
And of course, yet again, he destroyed his entire campaign for 15 minutes and then...
Got it. But he wasn't wrong.
No, he wasn't wrong at all.
Like I know it's hard to hear that, but the fact is, do you want immigrants from Haiti or Norway? I mean, duh.
Well, and people talk about we are a country of immigrants, but they're forgetting that we were a country of immigrants when they were coming through Ellis Island.
I know.
And we were expanding westward. And we just needed hot bodies then. We need, Silicon Valley types more. We need, you should look at the demographics of my class from now. We are no longer, Bob Smith and Jane Doe. We are a highly international class.
Yeah, of course.
So we've done that.
International is fine. Let's just make it international smart. Okay.
Yeah. It was MS-13. We do not need those guys, right?
Yeah, no, I think they can stay home.
Yeah, that's far. But getting them out of here is going to be hard. Exactly. And getting all the nationals who were sent here by their sovereigns to hang out until told to get into trouble. If you're an enemy of the United States and you saw the open borders and you didn't take the opportunity to send a ton of your operatives in, you're not a scary enemy because you're too stupid.
Yeah, right. Before you go, tell us what you predict, what you think is going to happen with the economy. You think inflation, now you sound bearish on real estate, but inflation is great for real estate. We love inflation as investors.
Well, it's a hedge, right? It's a hedge.
Yeah.
Well, so
it's
the
better than a hedge. You probably don't know this, but I created a strategy years ago called inflation-induced debt destruction. And the inflation pays your debt off for you. So while the asset is the hedge against inflation, because the ingredients of the asset are commodities, lumber, concrete, copper wire in the walls, petroleum products, glass, steel, labor, energy, those commodities hedge against inflation very nicely historically, but the debt gets debased by inflation. And that's exactly what the government is doing, right? We started the show with that topic.
So I in Ithaca could live in a house that's a third the cost of my house comfortably. Now, I did the math on that, precisely that, and said, what does real estate do? And the Thornburg Group, I think, did it and said, look, owning a house is sort of round numbers slightly above inflation. And when you bean count absolutely every life shred of it as an owner. But since it costs 3 times what I needed, I really had to say, look, this is not just a house, right? This is you can't just say, well, I have to own this. I could have gone a third. I lived in a 4-bedroom farmhouse on 2 acres. It was great, but I moved to the lake. So I know this math. And again, if I can find a way to rent it for more, then I understand that. Here's my pitch for why we're in trouble. This is not a real estate trouble. This is an equity trouble. In 1981, China came out of the Middle Ages, basically, and started selling labor. They desperately needed capital. They started selling labor for pennies on the dollar. Russia had not yet collapsed, but they were desperate for capital, and they started selling resources for as much as they could to build Russia's capital base up. The baby boomers hit the workforce as a huge demographic slug, and they brought their wives with them. And so we had the phenomenal demographic push. And interest rates, and if you listen to Buffett, he says this is the whole game. Interest rates were at 16. They dropped down to 1, down to 0 effectively over the next 40 years. These are all tailwinds. These tailwinds cause the market valuations. And now I'm shocked by how many people don't understand what a valuation is. Valuation is the price of equities divided by something that ought to track equities. So it should flutter around as opinions change, but it should not trend.
So say that again. That's an interesting statement. Valuation, say that again.
Market valuations are the price of the market divided by something the market should track.
In other words, the dollar.
So no, because the denominator is also subject to the inflation. So price to GDP, price to book value, things that also inflate. And so the inflation cancels an evaluation. So if inflation drives up the price of the equity, it's also driving up the profits. The nominal profits is driving up nominal revenues. It's driving up all these things. So if you look from 1880 to 1995, valuations just flood around. They don't change. They go up and down. And in 1981, they were at rock bottom. So we started in basement level valuations with, let's use PE. It's one of the most easily cheesed numbers, but price to earnings ratios most easily understood. And it was 6. So you were being paid 15% to own the market. The market was priced for 15%. Now, let me give you a contra example. Take some company that's got a PE of 100. The market is pricing that to return 1%. And you can say, well, but there'll be inflation. I go, but that won't change the fact your price earned 1%, because although that will drive the price up, it'll drive the price of everything else up underneath it. You don't gain. You don't gain by inflation. You got to create wealth. And so then the question is, what's the next 40 years going to bring? And it turns out if you make some very simple assumptions, one is that the GDP grows the same as it did in the 20th century. Oh, let me finish that first thought. From 95 to the present, the valuations left the channel. It was at the high end of the channel and it exited the channel. So from 1981 low to the present, valuations, which should not trend, compounded 3.5% a year. Compounded annually, 3.5% a year. If you assume the GDP grows normally and the valuations over the next 40 years regress to the historical norm, we will not move a dollar. Those are not complicated assumptions.
In other words, it sounds like you're saying nominal gains, no real gains.
That's right.
Yeah. But
valuations adjust for inflation naturally.
Yeah.
Any valuation metric worth anything adjusts for inflation.
I agree. But here's the thing.
And consequently, to get out of 150 to 200% overvaluation, you need to organically grow out.
As far as the general macro economy, I think your statement holds water. The issue is, though, that the smart investors and the upper middle class and the wealthy, obviously, they use leverage. They don't really use their own money directly to do any kind of investment. They borrow against equities.
I have no doubt the top 5% will do well.
Yeah. So they're leveraging. And so they're getting a compounding effect on whatever happens. For example, with income property or just real estate, just your own home, it works either way. If the property just keeps up with inflation and treads water, right? You're just hedging. That's better than nothing. But when you leverage it, say 10% down or 10% equity, you've got that multiplier effect of that leverage. So the 6% appreciation and real inflation of 6% turns into 60%. And that's why the rich keep getting richer.
I do believe that will regress to the mean too.
Tell me about that. How will it happen?
Well, the problem is the word leverage keeps showing up, and leverage has a nasty habit of unwinding.
Yeah, but it doesn't unwind on the people who take it out, unfortunately. I mean, it does unwind on the economy, but, that's just the too big to fail, socializing losses.
So the person who's listening to your podcast, except for the fact since you're a real estate podcast, maybe they've jumped on the right train. But the average person is told, look, put money in the S&P and sit and wait and buy and hold, and the market fixes itself. What I'm saying is over the next 40 years, the market's going to fix itself and you're going to go nowhere. Best analogy is the Nikkei. Got out over its skis in 89. Nominally, it's broken even in 35 years.
Right. But
nominally.
Again, Japan has a demographic problem the U.S. does not
have.
So
do we. Yes, we do. We're behind them.
Not really.
We're behind them.
Our population is still growing. And
let me make a case for demographics. Let me make a case for demographics.
Go for it.
Everyone says that you need the population to grow for the economy to be healthy. What you're saying is you need new entrants to pay for the existing entrants.
Yeah, that's a Ponzi scheme.
Exactly.
Yeah.
Exactly the definition of a Ponzi scheme.
Yeah.
I do not believe Ponzi schemes last indefinitely.
Yeah. Well, they don't. But here's the thing.
Therefore,
it's just like the saying, maybe it was a Warren Buffett, I can't remember, but the saying, the market can remain irrational a lot longer than you can remain solvent. So
I can remain irrational longer than the market can remain solvent.
My point, David, is they can kick this can down the road for another 100 years.
I don't think that's true. See, I don't think that's true.
Yeah. Okay,
I think we're at the end of a 40-year credit cycle, and James Grant and these guys are going to be right. And I think it's going to start to unwind, and it's going to grind, and it's not going to be the guy. Here's one thing I'll tell you. Crashes don't correct anything. They don't correct anything. To really correct the markets, 150, 200% overvalue, this is a 60% correction needed, right? To correct the market, you need to not only bring the prices back to earth, you need to correct investors' attitudes. If we crash 50% tomorrow, the dip buyers would show up by the bazillions. Mm-hmm. That would therefore would correct nothing. You need to knock the investors down. They get back up. You need to knock them down. They get back up. And by the end of 1981, we had knocked the investors down. And over the previous 14 years, they had made nothing nominally and lost 70, 80% inflation adjusted. They were broken. That's the bottom. We are going to go through some period like that. Now, if you own the high in 06, boot up. This is a challenge to your readers. Boot up an inflation adjusted S&P that covers at least a century. Mm-hmm. Go to a high. And the first thing everyone wants to talk about is how long does it take to break even? And it'll be like 20 years, right? The question I ask you is, how long does it take to hit that high? Not for the first time, for the last time. And 1906.
I was on a live stream with Peter Schiff last night, right? The ultimate bear, right?
May God have mercy on your soul. Right.
I know. He keeps talking, and he's always wrong, but he's interesting.
No, he's not always wrong, though. No, he's not always wrong.
I would argue with that. But,
no, he was calling
hang on. You'll get to that in a second. Let me finish. So, he made a really good statement years ago that I agree with. He says, since the Great Depression, the S&P or the Dow, I believe, has had no real gains. There have been nominal gains only. The only return is dividends. That's it. And I agree.
I pretty much agree.
I agree too. He's right. So go ahead with your.
So what are the dividends right now? Use that as a valuation metric. What are the dividends?
Well, I don't know. I'm not a stock.
They're like 1.5%.
Yeah. Okay.
So we're priced by that model.
Yeah.
And by the way, we're not at a low. We're at a high.
Right.
So by my model, if you look at 1906, the break even was something like 70 years later. You look at 1929, the break even, the last time that we hit that same inflation adjusted price was in the early 90s.
Yeah.
So if you were owning the market in 29 and you grew to be an old man, zero. Now, over that century, interest rates went from a high of 6% to a low of right now 1.5%. I would argue the market, that in itself shows you how overvalued the market is.
Listen, I'm not going to debate that because I probably agree with you. I'm not a stock market fan. I'm not a stock market expert. Look, I'm the guy.
Rip the S&P soul out.
I'm the guy who. I'm the guy who says the stock market is the modern version of organized crime. Okay,
I agree.
I think there are a bunch of criminals on Wall Street. Okay, but let's just switch gears on that for a minute. Okay, and about the economy in general, and maybe the stock market too. And look at the incredible advances we're on the verge of with artificial intelligence, nanotechnology, biotechnology. I mean, we are living.
I don't buy that.
You're the organic chemist, okay? So we're living in a pretty amazing time, the way I look at it. I'm wrong.
I think you're wrong on that.
Okay,
I think you're wrong.
Go.
I would say that if you'd said that in '99, I would have agreed. I would say
so. So we had the internet. I think AI is as big as the internet in general.
Well, let me put it this way. Fascinating thing. Robert Gordon's. Have you ever read Robert Gordon's book? It's about wealth creation. Some wealth creation's in the title or something. Robert Gordon wrote a brilliant book, and he talks about it. Amazon is not pioneering compared to the Sears Roebuck catalog.
Yeah. Okay.
You look at the modern companies like Facebook and Twitter and all these monsters. The Mag 7, they're dwarfed by Standard Oil, U.S. Steel.
Mm-hmm. Yeah.
Right. And then I was watching Peter Thiel the other day being interviewed, and he said tech has been stagnant for 25 years. Peter Thiel.
Well, Peter Thiel I respect a lot. I think he's
I was blown away, and I am a disbeliever. AI, I'm not convinced. I think it's going to. I use AI. I think it's going to be great, but I don't think it's going to be. I don't think it's necessarily going to transform. Someone was making the case. Tony Nash was making the case how much it makes him more efficient, stuff like that. He's in the money industry. And I said, Tony, everything you're describing about increased efficiency involves sloshing money around. Yeah. I said, that's not wealth creation.
It's not the real economy. I mean,
it's not the real economy at all.
Peter Thiel is famous for saying, we expected flying cars, but we got 140 characters instead, right?
I know, that's a great quote, isn't it?
Yeah, it's a great quote. And our technology, except for what Elon Musk is doing and a few others, right, is not physical. Okay, it's just software, which is eating the world, obviously, and it does move stuff around more efficiently. But that just works really well for a financialized economy, as you said.
That's right.
Yeah, but it doesn't build anything, Yeah.
How many of you listening to this would say that your lives are being made better by the digital world now? You get into these infinite loops and stuff where you're trying to get some help from someone and you can't get any help. And so then the question is this wealth creation? The answer is, I don't think so. And then, you look at some company like Facebook, are they really making that much money on ads? Is it possible maybe the, Catherine Austin Fitts $14 trillion missing from the Pentagon is finding its way into Facebook and finding its way into Amazon and finding its way into these companies? And the answer is maybe yes. That's a drag. Yeah. That's a drag on the system. Mm-hmm. So I'm not convinced this is a revolutionary economy. When was the last product Apple put out that was innovative?
Yeah, right.
And SpaceX, I think Elon's amazing. I don't think the electric cars. I think the electric car market's going to get crushed. I think
it's already getting crushed. I mean, electric cars are not ready for prime time. The battery technology has gotten a lot better, but it's still not good enough.
And by the way, I don't think the alternative energies work.
Yeah.
So we're going to be back at fossil fuels. So if your crowd wants to diversify away from real estate, go back towards the commodities, because I do not believe that ExxonMobil and these guys are going to have trouble selling fossil fuels.
Yeah.
And I do have a position in nuclear power. Now, here's the danger. The new second-gen nukes, which could revolutionize the world. You want to talk about revolutionize the world, provide better energy. That's the whole game, right?
And we're on the verge of that.
Now
that all the green weenies,
that's the bullish
that were supporting Jane Fonda and the China syndrome from the 70s, right? Now that they can make money from it, suddenly Google's all about nuclear power.
I have a theory that they're actually, there's AI is bringing nuclear power back. One could flip that argument and say, is it possible they're using AI to smuggle nuclear power back? Is it possible the causality is different? And they said,
an interesting way to put it.
We can sell, because a couple of years ago I said nukes are coming back. They got to come back.
Yeah.
And I thought maybe energy problems in Europe because of Russia and stuff like that would trigger it. And then they had a warm winter, so it didn't. But if you freeze your ass off for a winter, you will be begging them to put a nuclear power plant in your neighborhood.
Sure.
And so the second gen nukes, which I'm not an expert at, but I've tried to listen to the experts, the old plants, they use 6% of the energy and then the rest gets sent to waste. The second gen plants can use that 96%.
It's incredible.
They can go literally to the waste dumps, get the shit back and use it. Now, here's the question. Does investing in uranium make sense then by that model?
Mm-hmm.
And the answer may be no. And maybe we've got more uranium in waste than we'll ever need.
Yeah.
Right. And so it's a complicated. I'm supposed to do a debate with an economist about climate change, and I think he's going to take an economic slant on it. He's going to take two emergent systems and superimpose them in the debate, I think. And I'm going to go, how can you possibly predict the influence of the emergent climate with the emergent economy and make sense of that? I don't know. It'll be interesting to see what happens.
We shall see. David, we could talk for a long time, and it's always interesting having you on. But just kind of wrap it up for us, or share your thoughts on anything I didn't ask you just before we go.
So I'm not qualified to hold a conversation with you on real estate. I do think that if the S&P gets the wind knocked out of it, real estate's going to be in the splash zone. I do think that the real estate has the advantage of being hard asset investing, right? I think concepts are not going to sell well in the next 40 years. I think you're going to have to actually make stuff. And I think real estate kind of makes stuff, provides something real, that sort of thing. So I agree with your enthusiasm for real estate. I'm not sure the next 3 years of your existence are going to be rosy. As long as you're not too leveraged, which in our conversation, I think some of your listeners might be. By the way, I got to ask you a question. You know those two prepubescent real estate investors? I met those two kids. You know the two kids?
No.
There's these two kids who are millionaires now because they started investing in real estate. I met him in a meeting. I was at an investment meeting with it was the same meeting with Peter Schiff was there. It was a really interesting crowd. In any event, so the real estate argument's a fascinating one to me. Commercial real estate, nightmare.
Yeah.
That's a nightmare.
And
I think we might not ever get back to needing those things they built. And they don't convert the condos.
No, not
right?
very well.
So then the question, it becomes this question, what do you do with that building? And it's going to happen to college campuses too. We got one right up the lake that closed. What do you do with it? What do you do with the campus? And so there's going to be some.
It's very hard to convert some of these properties, no question. Yeah.
I heard the number, someone who analyzes properties supposedly for a living that says, okay, here's what I think you can do with this, says only about 25% are repurposable.
Yeah.
What do you do with the building? What do you do with an 80-story high-rise that you can't rent?
It sits there and it's got a high vacancy rate, and someone bought it for pennies on the dollar, and they manage it, and with their cost basis being so low.
Is it possible that this appalling left-wing policy of stuffing migrants into commercial real estate is a bailout for commercial real estate?
I don't know, but I think that's going to shift back anyway. Yeah, maybe.
But if you get paid $300 a head for migrants, and you have to provide no services, you don't have to clean the room.
Right.
When it's all done, you've collected pure profit, and then you renovate the thing to clean up the missing pipes and shit.
Yeah, right.
And start over. It's conceivable that the federal government said, okay, we're going to bail out real estate by putting in migrants.
Yeah, well, that bailout is ending under Trump, but
Today,
that's the way they're doing it.
Did you see what happened in New York City?
No.
Eric Adams kicked them all out.
The
next day after the election.
Yeah. Well,
now, I think Eric Adams has cut a deal with Trump.
Yeah. Hopefully he needs one.
Well,
he needs a deal.
Trump supported him at that press dinner. Mm-hmm. And I think Trump said, look, you bail. I'll help you out.
Yeah, well, he's going to need some help, and now he's probably
going to.
Good stuff. How do you want people to follow you on X?
Yeah, I'm on Twitter. I'm under my desk, but I'm on Twitter, David B. Collum. I do not need more followers, but I'm happy to see you.
Everybody needs more followers.
No, my Twitter feed was best when I had about 3,000. I kind of knew what was going on in there. Now it's just a dumpster fire.
Good stuff. Well, David Collum, thank you so much for joining us. It's always great to talk to you.
Thank you.
Thank you so much for listening. Please be sure to subscribe so that you don't miss any episodes. Be sure to check out the show's specific website and our general website, hartmanmedia.com, for appropriate disclaimers and terms of service. Remember that guest opinions are their own, and if you require specific legal or tax advice or advice in any other specialized area, please consult an appropriate professional. And we also very much appreciate you reviewing the show. Please go to iTunes or Stitcher Radio or whatever platform you're using and write a review for the show. We would very much appreciate that. And be sure to make it official and subscribe so you do not miss any episodes. We look forward to seeing you on the next episode.